Hi everyone, today I will be talking about the internal control of petty cash. First of all, what is petty cash? Petty cash is a small amount of cash that is kept on hand in a business to fund minor expenditures. The petty cash fund is an internal control for businesses so that they do not have to make a check for small expenditures. These small expenditures include, but are not limited to, stationery, postage costs, parking and taxi fares for clients, food or drinks for the office, reimbursing employees, or miscellaneous office supplies. There are 3 steps that are involved in a petty cash fund. These include establishing the fund, making payments from the fund, and replenishing the fund. The petty cash fund is under the responsibility of any appointed employee who will also be known as the custodian. The petty cash custodian is responsible for handing out cash to employees for appropriate minor office-related expenses. They are also responsible for safeguarding the cash and replenishing the fund when necessary. The first step to petty cash is establishing the fund. In order to establish a petty cash fund, a journal entry is to be made. In this example, Cakes & Co. on the 2nd of February debits petty cash by $275 and credits cash by $275. Making payments from the petty cash fund. There are 2 ways that employees can go about it. The first one being requesting cash directly from the petty cash fund, or the second one being the employee paying for the expense first and seeking reimbursement afterwards. Reimbursements to employees. So you may be wondering, what happens if the employee pays for the expenses up front? An employee pays for minor expenditures related to work using their own money. They can be reimbursed as long as they provide appropriate receipts. When making payments directly from the petty cash fund, the employee must request cash from the appointed custodian to cover the cost of appropriate minor expenditures they need to pay for. Replenishing the fund. When replenishing the fund, a journal entry is to be made. All expenditures must be accounted for in the journal entry, including cash short or over. Now, what is cash short or over? Cash short or over is when the receipts do not match with the amount requested to replenish the fund. As shown in the example for Cakes & Co., the amount requested does not match up with the receipts in the fund. What is requested is $250, whilst the receipts in the fund only add up to $237. This leads to a cash short of $13. When the cash short or over balance is identified, a general journal is then made to replenish the funds. In this example of Cakes & Co., they debit postage expense for $75, supplies expense for $100, transportation expense for $50, miscellaneous expense for $12, and cash short or over for $13. They then credit cash for $250. So when is the petty cash replenished, you may ask? The petty cash is replenished at the end of the period or when the account becomes low, whichever is sooner. Thanks for watching my petty cash screencast. I hope you enjoyed.